Hi, I'm Asif Farouk and this is Finextra at Cyboss. We're joined here today by Simon Newstead of RBS. Thank you for joining us. So, payments is of course a huge topic, as we all know, and especially harmonisation of the payments market. Why is that such an important topic?
It's a hugely important topic for the whole industry. First and foremost, because increasingly it's a key customer requirement. So our corporate customers, and this came out yesterday in the corporate forum session where I was speaking, our corporate customers are calling for greater and greater standardisation and harmonisation of the approach to payments globally. Why? Because they can see the efficiencies that brings for them, and secondly there's sort of a risk reduction element to it as well. From a banking perspective, we also increasingly need harmonisation within the payments market, really for similar reasons. We need the efficiencies, we need sort of simpler models rather than a proliferation of different payment standards. And even from the sort of looking at other stakeholders, if you look at the regulatory community, again, a greater simplicity and harmonisation of payment standards is also a key requirement for them in terms of understanding, monitoring and deciding when to intervene in the market.
So really, how harmonised do you think the payments market is today?
Well, if you look at the global payments market, and this is something that comes out in this year's Well Payments Report, which we launched earlier this Cyboss week with our report partners Capgemini, that the numbers are staggering. So there are going to be, or there were rather, 333 billion non-cash transactions, payment transactions globally in 2012, which is 45 for every man, woman and child on the planet. So that is a huge number of transactions. Now, if you get below the surface of what's a very big statistic, there is a lot of fragmentation still. So if you look across the different regions, the growth levels in each region are very different. So US is very different from China, Europe very different from some of the CEMEA countries. So growth rates are different, but also the payment instrument mix is very, very different. So there's greater use of cards in some areas. For example, debit cards dominate in some markets, whereas credit cards are more popular in others. And in fact, cards generally remain a very strong component of the growth that we're seeing in the payments market. But as for harmonisation, as maybe my remarks are suggesting, there's a great degree of variation still in the market around standards. And a lot of this is around not just technical issues, but issues of culture, of preferences in particular economies and markets. So that's not to say there aren't good examples of payment harmonisation initiatives. So SEPA is a great case study for payments harmonisation, and there are things sort of good and less good that you can draw from it to take into other payments initiation projects. It clearly is innovative in the way it's taken the ISO XML 20022 standards. It's innovative in the way it's created harmonised payment schemes, but there are also lessons, I think, that if you were starting SEPA again, you might do some stuff a little differently, perhaps getting regulator engagement in making some of the standards mandatory a little earlier, perhaps involving some of our corporate customers in particular in the dialogue around how to create those standards and what the requirements should be, again a little earlier in the process. But overall, it's a kind of fabulous case study for a regional payments initiative. So overall, the market remains very unharmonised, if that's a word, but there are good examples to draw on, and the direction of travel is very clear. We're moving towards a greater need for harmonisation, and there are lessons and examples that we can draw on as to how to achieve that.
And you touched on a little bit of it before, but what do you think exactly needs to be harmonised?
It's a range of things, and that's a very good question, because there's a temptation when talking about payments and payments harmonisation to think we're just talking about technical standards. So I've mentioned ISO XML 20022 already, and that's a great example of, in itself, a standardisation initiative for payments, but it's about much, much more than that. So if you go back to first principles, one of the first things that needs to be harmonised is definitions in the sense of what do we mean by a particular payment type. And again, I can draw on an example from this year's World Payments Report when we look at mobile payments and e-payments or internet payments. And one of the clear findings there is that there is no single industry definition of even what a mobile payment is. So you need to go back to first principles and make sure you're all describing the same thing if you want to achieve a harmonised outcome. So there's technical standards, yes, they have a role to play. Definitions of what we mean has a role to play, and then of course the processes. So the third part of a standardisation, harmonisation initiative has to be around processes.
So there's kind of a debate going around about regulation. Is it helping? Is it hindering payments? What role do you think regulation plays in the harmonisation of the payments market?
In terms of its role in payments harmonisation, regulation in the payments world is very complex. And again, if you look at the World Payments Report this year, we look at 35 different payment initiatives, globally, regionally, nationally, but critically we're looking at the interplay between those different initiatives and how some regulatory initiatives in one market are cascading their way across other markets, and how some regulations in some areas are not necessarily being replicated but are complementary, and in some cases how regulations can be a little almost contradictory with each other in terms of that they're pursuing specific objectives that may not necessarily always be immediately aligned. So if you look at what that means for payments, there are certainly great examples out there. SEPA's another good one. Back to SEPA as my example. SEPA's a good example where regulation has come in to support harmonisation. So there are good examples, but harmonisation isn't the only regulatory objective. So there are other cases of regulation where that's not necessarily top of the list.
And lastly, for success in the harmonisation of payments, what do you think are some of the key criteria?
If you look back at the initiatives that we've been involved in and that we've seen in the market, I think you're right, there are some sort of success factors that you can identify. A great first one is, does a particular initiative truly address a customer need? Because I think unless something really is core to the customer base, it's less likely to gain traction and be successful. A second key success criteria is something aligned with the regulatory agenda. It doesn't necessarily need to be on that regulatory agenda at the moment it's launched, but is it directionally in tune with what the regulators in the area or region are trying to achieve? Again, that's very important to be if this initiative is going to take off. And I think that the final piece of the jigsaw is there really does need to be a compelling business case for doing this particular thing at the current time. So harmonisation initiatives need to be dropped in at the right point, that there are actually challenges and dangers in standardising and harmonising a particular aspect of the payments market too soon. If it is done too soon, there's a risk of stifling innovation. If it's done at the right time, it's then establishing kind of a foundation stone on which efficiency and innovation can flourish. So I think if you put those things together, then you will have a very successful harmonisation initiative, and they're, if you like, the sort of ingredients that you can draw from other initiatives we've seen across the market, put those together, and that's the way forward.